From inflation and interest rates to trade tensions and conflict, we're seeing multiple macroeconomic and geopolitical trends creating uncertainty for the insurance industry. How can insurers be prepared and resilient? To help answer that question, I'm meeting two key people in the European insurance industry. Alison Martin, EMEA CEO at Zurich Insurance Group, and Urs Baertschi, Global CEO for Property and Casualty at Swiss Re. Starting with the macroeconomic environment. So this year, I think we're witnessing a continuation of some of the pressures that we saw last year, both high inflation rates that are not yet going down, rising interest rates. We're also starting to see some pressures on economic growth. So first question to you, Urs, how are you seeing this macroeconomic environment for 2024 impacting the insurance sector? And what should firms be doing to respond and mitigate that?
We live in a very uncertain and volatile world, Phil, and it's everywhere. It's about high interest rates, inflation, GDP growth changing. We have several crises at the same time, energy supply, climate change, and we also have several wars and conflict zones around the world. Some of the things are getting a little bit better. When we look at inflation, for example, in Europe here, we're looking at about 2.3% in 2024, and that's fairly close to the price stability target of 2.1. On the other hand, when we think about geopolitics, the risk is to the downside. And just this year, think about this, almost half of the world's population is voting for a new president. And as we've seen in the past, that's not always predictable and can have a very high impact on the environment that we face. For us in the insurance industry, all of this is around us, of course. For our own operations, volatility, for example, on the asset management side can have a big impact. And then for our customers as well. They might want to buy more protection in an uncertain world, or conversely, when inflation is up and affordability and disposable income is down, they might actually have less means to go buy more insurance. So this is all around us, but our industry overall is very resilient, even in this environment. And we keep coming back to our purpose, which is to provide protection for people around the world when they need us the most. And that's as important as ever.
I know Zurich has also been thinking about this issue for a while, and you contributed to the global risk report together with the World Economic Forum. And a number of these issues were also considered as part of that. So I guess with a focus on the downside risks of that environment, what are some of the things that came out of that report, some of the things that we ought to be thinking about in terms of responding to that environment?
So one of the things that troubles me most actually about the findings of the report is how few people think that actually the world's going to be a settled and calm place. So only 16% of the respondents to the report thought that within the next 2 years, the world is settled and calm. Why is that important? Well, obviously for business, the most important thing is actually that you have a calm outlook, whether that's geopolitically, macroeconomic, climate, etc., all the things that Urs talked about. I think even worse, less than 10% think that over 10 years. So my message is it's going to be troubled, choppy waters ahead. So as we think about how do businesses position themselves for that, it's got to be in that context that people don't think it's going to be calm and they certainly don't think it's going to get better. Now, what does that mean for insurance companies? I think it's whether it's non-life and it's thinking about how we're going to tackle inflation, but combined with the cost of insurance and therefore affordability. So are we looking at retention levels? Are we looking at coverages so that we allow customers to choose the level of cover that works for the budget that they have? Or on the life side, are we thinking about what do the high interest rates actually mean in terms of product design? Can there be innovation around how we think about, again, what's the coverage that somebody needs that they can afford? And of course, it's an interesting environment when you're competing with government bonds instead of competing with our usual competitors.
Thank you so much, and thank you both for joining me today for this fantastic conversation.